In the world of investing, nothing quite shook the ground like the AMC short squeeze. Imagine a world where popcorn and cinema go hand in hand with Wall Street and hedge funds. That's the world AMC Entertainment found itself in. An iconic symbol of the American film industry, AMC's theaters have been a staple of the American movie-going experience for decades. But let's not sugarcoat things here. The company was struggling, grappling with the reality of a rapidly changing industry and the devastating impact of the global health crisis. The future of this cinema giant was looking more like a film noir than a blockbuster hit. But then, something unexpected happened, something that would even the most seasoned Wall Street traders spit out their morning coffee. An army, banding together on the internet, started rallying behind the beleaguered stock. These weren't your typical Wall Street hotshots. No, these were everyday people gathering on Reddit, mobilizing their resources and taking on the big guns of Wall Street. Their mission? To trigger a short squeeze. This is when a stock's price surges, forcing those who bet against it to buy shares in order to prevent even more losses. The result? A skyrocketing stock price. And so, AMC, a company on the brink of financial ruin, found itself at the center of a David versus Goliath showdown. The Reddit users, armed with their trading apps and a sense of collective power, were taking on the hedge funds. The underdogs were making waves, and the financial world was with bated breath. And just like that, AMC became the center of a financial whirlwind. This wasn't just about a company and its stock. No, this was a narrative about power, the little guy taking on the big guy, about an unexpected turn of events that shook Wall Street to its core. So buckle up, folks. The story of AMC's short squeeze is a wild ride. And we're just getting started. As we further into this financial maelstrom, remember to hit that like button and subscribe to the Purdy Plays channel. And as we draw this scene to a close, here's a gentle reminder. Don't forget to like and subscribe to our channel, Purdy Plays. We bring you new videos every week on all things finance and the stock market. Stay tuned, and remember to keep those notifications on for Purdy Plays, your weekly guide through the fascinating world of finance. To truly understand the magnitude of this event, we must trace back the steps. Our journey starts in the virtual corridors of Reddit, where a group of traders on the subreddit Wall Street Bets began discussing the possibility of a short squeeze on AMC Entertainment. This was back in late 2020, and AMC was a popular short target due to its struggling finances. As the calendar flipped to 2021, these discussions started gaining traction. The idea was simple yet audacious. If enough retail investors bought shares and held, they could trigger a short squeeze. This would force the short sellers to buy back the stocks at a higher price to cover their positions, thereby driving the price even higher. By January 2021, the plan was in full swing. Retail investors were piling into AMC, and the stock price started its upward trajectory. The chatter on Wall Street Bets grew louder, the media caught on, and the frenzy was officially underway. Come February, the squeeze seemed to be in full effect. Despite AMC's bleak financial outlook, the stock price continued to skyrocket. The power of collective retail investing was on full display, shaking Wall Street to its core. But the peak was yet to come. In late May and early June, the stock surged to unimaginable heights. AMC's share price, which had been languishing in the single digits at the start of the year, hit record highs. The short squeeze was at its zenith. However, the higher they climb, the harder they fall. As quickly as the stock rose, it started to tumble. By July, AMC was back to earth, leaving many newbie investors holding the bag. In the end, the AMC short squeeze was more than just a financial event. It was a socio-economic phenomenon that highlighted the power of retail investors and the potential pitfalls of short selling. It was a roller coaster ride that left Wall Street reeling and retail investors both triumphant and despondent. The timeline of events paints a vivid picture of the frenzy that was the AMC short squeeze. New traders, often armed with little more than enthusiasm, played a significant role in this saga. The advent of user-friendly platforms like Robinhood has simplified stock trading to a few taps on a smartphone. This ease of access has opened the floodgates to a new breed of traders, many of whom are just starting their investment journey. For most of these traders, the thrill of the game, coupled with the potential of quick gains, proved irresistible. This wave of new investors found themselves in the midst of the AMC frenzy. The hype around AMC was simply too palpable to ignore. Social media platforms were buzzing with discussions about the stock, with many users encouraging each other to hold their positions and buy more. The message was clear: AMC was the ticket to quick riches. The concept of a short squeeze was no longer confined to the jargon-filled world of seasoned investors. Here was a word that had captured the imagination of the masses. People who had never invested before were now discussing short squeezes with a fervor usually reserved for a major sports event. But, here's the thing. These new traders were not merely passive observers, they were active participants buying shares and contributing to the skyrocketing price of AMC. They were driven by a shared belief that they could take on Wall Street and come out on top. However, it's important to remember that the stock market is not a casino. It's a complex ecosystem where decisions should be based on careful analysis rather than hype. The excitement around AMC, while intoxicating, also served as a distraction from the company's less-than-stellar financials. In their enthusiasm, many of these new traders overlooked the fundamentals. They were swayed by the promise of quick gains and the camaraderie of being part of a movement. They were, in many ways, the foot soldiers in the AMC saga, marching forward with unyielding determination. In this grand scheme, newbie traders were the fuel that kept the AMC short squeeze fire burning. Every party must come to an end, and so did the AMC short squeeze. As the dust settled and the echoes of jubilant cheers faded, the aftermath of the AMC short squeeze was laid bare for all to see. It was a spectacle akin to the morning after a wild night, the thrill of the party replaced by the stark reality of the cold light of day. The aftermath was not a pretty sight. Many newbie traders who had dived headfirst into the market found themselves nursing severe financial hangovers. You see, the AMC short squeeze was not a golden ticket to instant wealth as some may have believed. It was a volatile roller coaster ride that left many investors financially bruised and battered. These new traders, lured by the promise of quick profits, found themselves on the losing side of the equation. The losses were substantial. Some traders who had invested their life savings were left with virtually nothing. Others, who had taken on debt to invest, found themselves facing a mountain of liabilities. This was a harsh, bitter lesson about the realities of investing. The AMC short squeeze was not a get-rich-quick scheme. It was a high-risk gamble that didn't pay off for many. But it wasn't all gloom and doom. The aftermath of the short squeeze also served as a wake-up call. It was a reminder that investing is not a game of chance. It's a discipline that requires knowledge, patience, and a clear understanding of risk. It taught many new traders the importance of due diligence, of not getting swept up in the frenzy, and most importantly, of not investing more than they could afford to lose. For some, this was a costly lesson, but for others, it was a valuable experience that would shape their future investment strategies. The aftermath of the AMC short squeeze was a cold reminder that not all that glitters is gold. It was a brutal reality check that laid bare the stark truths of investing in a volatile market. It served as a harsh lesson but also as a crucial stepping stone on the path to smarter, more informed investing. Despite the chaos, the AMC short squeeze was not without its lessons. As we've seen, the AMC saga unfolded like a blockbuster movie with unexpected twists and turns. It's a tale that will be etched in the annals of financial history, but more importantly, it's a narrative that offers significant insights for traders, especially those new to the game. First, the AMC short squeeze underscored the importance of due diligence. The story highlighted how critical it is for investors to thoroughly research a company's fundamentals before committing their hard-earned money. While the AMC stock price skyrocketed, it was not due to the company's financial health or growth prospects, but rather the result of a short squeeze driven by retail investors. This reminds us that the stock market isn't a casino but a platform for buying shares in businesses. The value of those shares should ideally reflect a company's underlying health and potential for growth. Second, the AMC saga emphasized the power of collective action, but also the perils of herd mentality. The short squeeze was fueled by a group of retail investors banding together, demonstrating that even small players can have a significant impact on the market. However, it also revealed the dangers of getting swept up in the hype. Many investors jumped on the AMC bandwagon without fully understanding the risks, resulting in significant losses when the tide turned. Lastly, the AMC short squeeze served as a stark reminder of the volatility of the stock market. Prices can fluctuate wildly in short periods, particularly when driven by speculative trading rather than fundamental analysis. This underscores the need for investors to diversify their portfolios and not bet everything on one stock, no matter how enticing the potential returns may seem. The AMC short squeeze, a roller coaster ride of highs and lows, served as a potent reminder of the risks and rewards of investing. Whether you were cheering from the sidelines or had skin in the game, there's no denying the lessons learned from this unforgettable chapter in financial history. Before we wrap up this roller coaster ride, we'd like to take a moment to say thank you. If you've enjoyed this deep dive into the AMC short squeeze, learned something new, or simply appreciate the effort that goes into our content, then we'd love your support. How can you help? It's simple. Don't forget to hit that like button and subscribe to the Purdy Plays channel. Not only does it give us a boost, but it also ensures you won't miss out on our weekly videos. From the latest trends in the investing world to in-depth analysis of market events, we're here to keep you informed and educated. Your support allows us to continue creating content that's insightful, comprehensive, and accessible. So if you're ready to take your investing knowledge to the next level, make sure to stick with us. Thanks so much for tuning in, and as always, we'll see you in the next video.